we will break down 4 trades taken in different market conditions. Each setup is unique, but they all have one thing in common. They are based on logic, not emotion. Another winning trade. The account values keep growing, but honestly, that's not the most important part. Buyers finally take control. The trade closes in profit. A great result. This is exactly what calm confirmation-based trading looks like. The final result is $1 in profit. Hey everyone, great to see you all back on the channel. Today I've got another interesting trading session for you. We will go through 4 different trades and talk about why successful trading isn't about guessing where the market will go. It's about understanding why it's moving the way it is. A lot of beginners think experienced traders have some kind of special instinct, like they somehow know exactly where the price is going a few seconds before everyone else. But that's not how it works. An experienced trader doesn't try to predict the future. Instead, they focus on what's happening right now. They watch how the candles behave, measure the strength of buyers and sellers, and only then make a trading decision. And that's exactly the approach I want to show you today. We will break down 4 trades taken in different market conditions. Each setup is unique, but they all have one thing in common. They are based on logic, not emotion. And as always, if you would like even more market breakdowns, trading ideas, and educational content, make sure to join my Telegram channel. I post a lot more practical material there to help you improve your trading step by step. Now let's jump straight on the chart. Alright, we are on Olymp trade platform. I'm using Japanese candlestick because they are one of the clearest ways to understand who is currently controlling the market, the buyers or the sellers. Today's asset is USD and Swiss francs. The payout is 93%. The first position will be $40. The expiration time is 30 seconds. When you're trading on such a short time frame, it's especially important not to rush your conclusion. Each candle forms very quickly, but even within those few seconds, you can often see which side is gaining control. So I'm simply watching the price, and here comes a strong bearish impulse. The candles start expanding quickly. Sellers are clearly increasing the pressure. That's enough confirmation for me to take a down position. Now all that's left is to stay calm and let the trade pay out. Price pulls back slightly. For beginners, this is exactly where panic usually starts. It suddenly feels like the analysis was completely wrong, but the market almost never moves in a perfectly straight line. Small pullbacks are completely natural, part of an impulse, so there is no reason to panic. A few moments later, the sellers step back in. The candles continues moving lower. 3, 2, 1. There we go. The first trade closes in profit. That's $37 earned. A great way to start the session. Let's keep going. This time, I'm increasing the position to $80. The time frame stays exactly the same. Once again, I carefully evaluate the market. Now picture looks differently. Price has been moving upward. Several strong bullshit candles create a solid impulse. But now, I'm starting to notice something important. The move is approaching local resistance. Momentum is slowing down. Buyers are finding it harder to push the market higher. Situations like this often creates an opportunity for a short correction. That's why I'm opening a down trade. Now let's watch how it develops. Almost immediately after entering, the candles start moving lower. These are always satisfying movements. When your analysis lines up with market behavior, it naturally builds confidence. But even then, it's important not to relax too early. Every trade deserves your full attention until it's over. Another winning trade. The account values keep growing, but honestly, that's not the most important part. What's important is that every trade continues to validate the analysis itself, and that's what consistent trading is really built on. Now let's move to trade number 3. This time, the position size is $160. The market has changed once again. After a series of bearish candles, I noticed something interesting. The lower wicks are getting longer. Why does that tell us? Each time sellers try to push the market lower, buyers step in and pull the price back up. That's one of the classic signs that selling pressure is beginning to weaken, and details like this should never be ignored. Of course, one long wick alone doesn't guarantee as a reversal, but when the same signal starts repeating several times, the probability of a shift in momentum gradually increases. And that's exactly what we are seeing here. So I decided to open an up trade. During the first few seconds, price remains fair quietly. There is a bit of back and forth movement. but the level continues to hold, and that's exactly what I wanted to see. Many beginners make conclusions far too quickly. One red candle appears and suddenly they think everything has gone wrong. But you can't judge the market based on a single candle. You have to look at the bigger picture, and right now that bigger picture still favors the buyers. There it is. The market starts pushing higher. The candle turns green. Buyers finally take control. The trade closes in profit. A great result. This is exactly what calm confirmation-based trading looks like. Now for the final trade, the biggest position of today's session is this one is $300. This is exactly where emotion usually becomes stronger. The larger the position, the more pressure people tend to feel. But professional trading means that the position size should never change your decision-making process. The analysis stays exactly the same. The expiration remains 30 seconds. After evaluating the setup, I decided to take another up position. Now let's watch carefully. During the first few seconds, price starts moving around, a little lower, then higher, then lower again. This is where staying emotionally balanced becomes incredibly important. Many beginners mentally change their decision every few seconds. Maybe I should close it. What if I reverse? Maybe I got it wrong. Those thoughts are completely normal if you let emotion take control. Instead, I simply stick into my original analysis. As long as the market structure hasn't changed, there is no reason to interfere. And here comes exactly what we are waiting for. Price gradually starts turning higher. The candle becomes bullish. Buyers increase the pressure. The move develops exactly the way the original analysis suggested before the trade was even open. And there it is, another $279 profit. That wraps up today's trading session. The final result is $540 in profit, but honestly, the money isn't big as the takeaway today. Notice that none of these trades were based on trying to guess where the market would go. Even single decision came from observing price behavior. Sometimes we traded with momentum, sometimes we traded off a reaction at a key level, and sometimes we focus on the changing balance between buyers and sellers. That's exactly what separates systematic trading from simply gambling on the market. I hope today's breakdown showed you that the consistent trading doesn't begin with finding the perfect strategy. It begins with learning how to observe the market carefully and trust your own analysis. Remember, long-run results don't come from taking as many trades as possible. They come from patiently waiting for a quality setup, staying disciplined, and keeping your emotions under control. If you would like to see more trading breakdown, educational content, market ideas, and practical tips, be sure to join my Telegram channel. We regularly review real market situations there and learn how to make a smarter trading decision. Thank you so much for watching. I wish you confidence, a clear mind, solid analysis, and nothing but well-planned trades. See you in the next video.